confirm what we're saying. This is going to break that neckline and move to 160 and 162. So we want to be very specific on the lookout for this momentum trigger. Again, on the 1 hour and the 15 minutes, we go long, we go all the way to 160 and 162. Whatever we're gonna long, we just need a stop at 154.6. We're sure about the stop, 154.4 to be exact. So there's a very good trade to be made here. All right, we will be longing on this February pivots between 156.7 all the way down to 155.6. The stop here has been moved higher to 154.4. We're going, of course, to 160. So let's take a look at the internals. This is today's 4-hour chart. The internal segregation is correct. The chart shows that we have actually finished wave 3. We are having given internal 1 and an internal 2. Higher degree 1 and higher degree 2. This is an internal 1 and an internal 2. The internal segregations are all correct. 1 in yellow, 2 in yellow, 3 for A, B, C. This is higher degree 3. This is at a neckline. It becomes a level A. Now the market is doing a correction 4, all right, or a wave B, but because this is going to be a bull trend, this is an internal 3 into higher degree 3. We expect another wave 5 into higher degree 3. So the first correction into 4 is labeled here, A red, B red, C red, that is that green 4. This is now moving in an ending diagonal. It's going to be doing A, B, C, D, E all the way to 158. This is going to be final level of 5 into 3. After that, we're going to get a wave B or we're going to get a wave 4 correction. Wave 4 will of course correct right down to internal level 1 or high degree level 1. We think probably internal level 1. All right, and therefore we get a very congested shoulder one more time. That's going to be an A and a B and a C before the market takes off to 160. There's still some time to wait. Okay, so over here we're going to be having, at the end of this procedure or this correction, we're going to have a high degree A, high degree B. The market takes off at 50% between the two necklines. You're seeing left shoulders. We're going to have right shoulders equating with these. 50% between the two necklines comes in at 156.10. So we do not expect to have deep retractions anymore. There's going to be congestion, of course, but 156.25 is a buy. 155.85 is a very solid buy. This is the final accumulation to the bottom of wave B to take you all the way to 162. Okay, the stop is just below that dashed red line, 155.2. Right now, for the current trade that we're doing, buying into this ending diagonal will take you to internal degree 5 of 3. You're just buying into the diagonal, 156.2, even 156.6 takes you to 158. The stop here is just at that dashed red line, 155.2. Once we make a final entry into level B, a final position trade, we're looking here at position trades, these two green dot arrows, we'll be buying 156.25, 155.85. The stop becomes 154.4, that level here, 154.38. Right, we take this of course to 160 and 162. We are supported on the 4 hours. We have a trigger to show that this is only going to be a shoulder and not a deeper head. We talked about this yesterday. We have very strong support on the 4 hours. We had rejected the last time because of, at the same neckline, because of weakness in momentum. Let's take a look at today's trade. This is the intraday swing. So that is an A. This is degree 4, yes, and we're doing level 5 into 3. We were already long, so we just confirmed that if we're already long, we're holding to 157.95 or 158. This is going to be level 5. Then you're going to do an A, B, C into that internal degree B. All right, so forget about that internal degree B. Again, if you're already long, you want to go to 158. All right, and you're now at 156.63, so you just hold until 158. If you are not long and you want to do a short-term trade, you just long the market and have a stop below level 2, 155.2. So we're longing 156.7, for instance. 155.2 is 150 points down. We're going to 158, so you are going to see 140 points of probably profit, hopefully. All right, so this is the intraday trade or short-term trade. That's a long right now, takes you to 158. The stop is just below level 1, 155.2, because this is an Elliott structure that will take you to the top of that with 5 into 3 at that neckline. All right, if you don't want to join the market and you're not already in the market, you would want to prepare yourself to long at 156.25, 155.36. Okay, so this is a bit delayed here to 155.36. In reality, we only expect to see 155.85. We explained why, because the second shoulder will only do 50% between the two shoulders. Let's take a look at the 4-hour chart. So 156.36 is actually at the lower neckline. Now this shoulder here should bounce at 155.85, 50% between the two necklines, most probably, but we would go on confirmation. This is a position trade now. So if you don't want to go into today's trade, you would wait until the market rejects at 158 or confirms that breaks above. Probably rejects at 158. We buy 156.25, this level here. We buy 155.4 if you get to see it, or on a confirmation 155.85. If the market falls below level 1 altogether, we will hedge our holdings by having equal amounts of longs. You're looking at, if the market breaks below this neckline, you're gonna hedge at 154.4, or if you break below that neckline, you want to hedge below level 1, this level 1, because you're gonna be doing the second hit. The momentum would have changed, so you could do a little money and protect your longs. We're going to try and do probably a risk matrix for this trade long term, so that we can gauge and know the potential of the yield, how much money can be made if we hold it to 160 and then 162 and so forth. It will be a positive carry, just like the United States was against the yen, because of course if there's interest rate differential between sterling and yen, then of course we would want to make use of that differential. So again, if we fall below that level, it is exactly 154.5 and 154.4 below level 1 here. You're looking at that level 1 here. If you fall below 154.5, you're just above high degree level 1, but you're below internal degree level 1. We will open hedges to protect our swing or our position trade. So that is the level to hedge. Otherwise, again, to recap, if you want to join the trend today, we would simply buy market. The stop is 155.2, target is 158. If you don't want to join the market, if you're already long, you would take target at 158. If you don't want to join the market, only want to do a position trade, you would wait for that correction into B. You're looking at probably an A, and then there's an A here in yellow and a B in yellow, and there's gonna be a C here in yellow. We would want then to buy at 156.25, 155.36, or 155.85, depending on the confirmation for the second part of the size, with a stop at or a hedge below 154.5. The target for that second position trade can take us all the way to 162. So it's very lucrative to take it, and we wouldn't want to miss it.